a brighter and a much better morning coming in for Paytm, especially Paytm shareholders, given the fact that the stock has finally actually snapped out of that lower circuit streak that it had been witnessing over the last 3 trading sessions. Today, the stock has actually rebounded. It's all rebound of as much as 18% from the day's lowest point. It actually was trading higher by over 7% or so last time I checked. Now it has given up some of those gains, nevertheless holding on to positive territory. You have a slew of notes have come in on Paytm, but one of the most important note that's actually grabbing a lot of eyeballs and attention today has to be the Bernstein note that is coming on Paytm. And what Bernstein is saying that they are maintaining an outperformance stance on Paytm with the target price of around 600 rupees per share, and they are believing that the stock is back near doomsday's valuation. But what's the rationale behind maintaining that buy stance on this particular counter? Let's bring on board the analyst himself to talk more on this. And we have Pranav Gundlapalle from Sanford C. Bernstein joining us. A very good morning to you, Pranav. Thank you so much for joining us on ET Now. And let me first actually quote a line that is coming on your particular note, where you've mentioned that you all are now going to be leaning towards the buy camp when it comes to Paytm. Do you think that the worst is already priced in for Paytm? Because remember, there are a lot of rumors floating around on the license cancellation also that could be likely for Paytm. So do you think that everything is priced in at these levels right now?
Yes, I think at these levels, you're almost at a point where even if you assume the entire payments bank gets shut down and all the business which were housed in that particular entity, which is your wallets and some of the prepaid instruments, go off, and you still can see significant upside to where the current valuation is. Right. Secondly, we don't expect, assuming the required licenses come in. I'm not talking about the payments bank license, but they're able to continue with the UPI payments largely. I don't see a big market share attrition either, just given that the way the market is structured. And therefore, I find this to be attractive valuation. So the buy call is a combination of the extent of correction that the stock has seen and the limited impact that we see from the payments bank entity going away. Now, there could be further downside if you see this action spreading to other parts of the business. And there is no reason to believe that's indeed the case at this point in time.
All right. Thank you so much for your take, Pranav. This is Shrishti also joining in. But in your SOTP calculation, how much value will you give to the wallets business versus the rest of the business? And what do you make of these reports of the sales of the wallet business? Is it really possible?
See, I think the wallets and the entire set of business. So there are two parts of this payments bank, Srishti. I think there is one which is products that are housed in the payments bank. So wallets is one, the savings and current accounts being the other, some of the prepaid instruments, FASTag, etc., the other things that sit inside the payments bank business today, which are at risk, right? So now whether they can be resumed or not is a question, and probably will take time for it to play out. But we are assuming that that's broadly gone. I mean, there's no near-term comeback for those products. Now, those components probably account for less than 10% of the payment GMVs and less than 20% of payment margins in itself, right? So I think that's a much smaller impact. And if you look at, bulk of the valuation for this business comes from the loan distribution business. And if you, look at EPS for the later years, a lot of it comes from the lending business. So a portion of payments revenue going away should not be that negative in itself, unless it has implications for the other businesses, which is where I talk about this spreading into, say, the lending business, if partners choose not to work with Paytm, or if the regulator continues this action in other segments. That's the downside scenario, where the likelihood appears limited, which is why my SOTP I don't see a big reduction in the other components of the model.
Pranav, while we speak, we have agencies' reports coming in where they are attributing it to sources that Paytm founder and officials have said to have met RBI, and this in order to address the roadmaps to address the regulatory concerns that they have actually pointed out on. So keeping that also in mind, what next do you think for Paytm now? Do you think that the trust deficit will continue to plague the growth even post these issues are resolved, given the fact that they're really acting pretty fast on it? and it has shaken a lot of consumer confidence as well, and investors also.
See, investor confidence will take a while, right? Because if you are in the financial services business, the two things you don't want to see happening is asset quality issues and regulatory issues. And those two will take a long time to be mended, and therefore that becomes an overhang. On the consumer and merchant side, see, I think the way the Indian payment space has evolved, I don't think there's ever been a massive amount of trust or a need for trust in these platforms. Because see, the reason the adoption of Paytm or its competitors, PhonePe or Google Pay, has happened at the pace it has happened is because the consumers and merchants retain money in their bank accounts. So the trust remains with the bank accounts. So I don't think that part is going to change. And therefore, the trust discussion, in my view, is largely limited to the payments bank accounts that, where I do see them migrating to other banks. But that should not be a material impact on the business itself. Yes, you will have a short-term disruption, but as long as money is cut to a merchant's bank account that he knows and he trusts, I think all the others should be easily solvable.
And lastly, Pranav, we understand that the nodal banks are a bit skeptical before tying up with Paytm now. So how big an issue this can be?
But yeah, see, I think there we assume that most of these issues can be sorted by end of this month, which is the deadline they have. And the idea here is that, or the reasons here for our view is that one, the business that Paytm does in terms of customers and merchant segments is not too different from what its peers do. And therefore should eventually find a bank which is happy to run their nodal accounts, number one. And number two, even from a system perspective, they are a reasonably large component of the UPI payment system, right? So they are about 30% of the P2M market, P2M transactions. So I think there would be enough efforts or enough assistance provided to make sure that the payments continuity is maintained, not just at a Paytm level, but across the overall UPI payment story, right? You don't want that to get disrupted. So I think you will see some sort of a partnership emerging. Now that remains a risk. Like I said, the downside that I see here is if the UPI payments don't continue post-Feb, remains an outside chance. But if that does play out, then there's obviously going to be a lot more downside than where the stock is today.
Lastly, just to get your final word then on this, Pranav, first, in the fintech space, will Paytm be one of your top recommendations at this point in time, given the correction that it has already witnessed? And also, what could be an upside target if for Paytm? 600 is what you are penciling as of now.
Yeah, 600 is what I'm penciling in. I think the valuations make it really attractive and make it probably the top pick amongst the fintechs. If you compare them with the private market valuations for most of their peers, they remain extremely cheap. In terms of the catalyst and where I could see upside is, I think you will see that I think the March 1st or in the first quarter, last quarter results come out. I think you will quickly get to know how much of a disruption it has been to their business, and any evidence that there's been minimal attrition in market shares or disruption to routine businesses should drive a significant upside from the current levels.
Right. Thank you so much, Pranav, for joining us on the show, actually giving us a rationale behind that note coming in on Paytm, and also what's Bernstein's take coming in on that particular counter. So thank you so much for joining us, and also specifying on the crucial parts of that particular report. So that was Pranav Gundlapalle from Sanford Bernstein talking about Paytm, and the stock has seen a smart recovery from the day's lowest point.